Appreciate that compliment, Natalia. Hey guys, welcome. Today I'm chatting cryptocurrency 101. And yeah, look, obviously an interesting space at the best of times, but I think with what we've been seeing over the last little while, there's a ton of stuff in the crypto space. My view is that there's still a lot of opportunity out there, but there's also some risks that are really important to manage. So today I'm going to start really with essentially the fundamentals and the super basics, but what are the things that you need to know to make smart decisions around crypto? What are the questions that you need to ask and answer to make sure that you're making the right moves for you? And then practically, how do you plan with this stuff? Because there's a lot of different ways to be right when it comes to money. And I think, like with this stuff in particular, like it's even more complex and confusing. So, guys, as we're going through today, please feel free to throw any questions into the Q&A. In particular, you can put any banter into the chat, and I'll do my best to address as many of those as I can as we go through. Cool. Guys, so please don't rush out and make any life-changing decisions off the back of what we cover today. I strongly suggest you seek out personalized advice before jumping in. If you make any big or important decisions, it's probably a good idea to be doing that anyway. So, look, I think when it comes to crypto, when it comes to money more generally, that everyone's situation is unique, but there are some really common challenges that people face when it comes to making these decisions. So the first one is information overload. It's like there's so many options out there, so much information. It's hard to know who to listen to, who to trust. It's almost a bit like you're drinking from the fire hose. The second one is people struggling to really find balance between how do you get ahead with money at the rate that you want and live a good lifestyle at the same time. And the third is this Fulfil, which is basically the fear of effing it up, the fear of making a mistake that's going to cost you a whole bunch of money. No one wants to be the person that does something dumb that causes them a big setback or having to undo a lot of the hard work they've put in to get to where they are. So I've found that often leads people to get not stuck doing nothing, but sometimes you're just stuck doing the same thing that you've been doing in the past. And it means that you're missing the opportunity to be getting better results and getting more out of what you have now. So what I've found is that there's three main things that you need to get right to be successful with your money. Today, we're going to be focusing on investments in crypto specifically. But just so that you know, there are three main areas, which is structure, making it easy to save and manage your money, strategy, knowing what your pathways are in front of you and making sure that you're doing the right things there, and then investments that are going to deliver you consistent progress over time. Now, if any one of those three elements is missing, it ends up dragging down on the others, and it's hard to get any good sort of result. So if you don't have a good structure in place, you're working with a leaky bucket, and it's really hard to know how much money you've got when it comes to that you can actually direct to investing. If you don't have a good strategy in place, you're leaving money on the table, and you're probably stressed and leaving a lot of peace of mind on the table as well. And then from a solutions perspective, if you don't have good investments, you're going to blow up your cash, and that's a disaster. So not three steps, but elements that you need to get right. And just before I crank into the crypto content, I thought it'd be worth sharing the different stages that I found that people go through with their money. Essentially, I've found from talking to a lot of people about their money over the years that there's four key stages that people tend to progress through, and three things that define where you're at, which is how quickly you're getting ahead with your money, your ability to live the life that you want, and how you feel about what's going on with your money, your peace of mind levels and confidence levels. So the first stage is distressed. And for people in this distress stage, that's where you're essentially making no progress at all, getting ahead, or it's slow and much slower than you want it to be. You're essentially trapped from a lifestyle perspective because you've got no money to make the personal lifestyle choices that you want. And then understandably, you're stressed out. Now, I've found that you can't actually get out of this distress stage without making a clear commitment to your money, because money is one of these things that it is really important, but it's never really urgent. So it's easy to let it just get put on the back burner for a tomorrow that never comes around. The next stage that I see people in is a stalled stage. And in people in this stage, that's where they're making some progress getting ahead, but it's slow and slower than they would like it to be, that they're able to make some of the personal choices that they want, but it often comes at sacrifice of getting ahead financially at the rate that they want. And from a peace of mind point of view, they're not fully stressed out, but do just have that niggling sort of worry in the back of their mind that there's something that they're missing out on. The next stage is the comfortable, where at people in this stage is starting to get some really rapid, building some good momentum rather from a financial perspective, building a real confidence from a peace of mind perspective, and finding a nice balance between getting ahead with money and living a good lifestyle. And then the last stage, or the final stage, is what I very technically labeled the killing it stage. And for people at this stage, that's where you're getting some rapid acceleration from a financial perspective, no limits on the personal lifestyle choices that you can make because you've got tons of money to do that with. And from peace of mind point of view, feeling completely carefree. Now, no matter where you're at, and some of you guys might be able to identify with some of the stages that I've got there, but no matter where you're at, there's always some things that you can do to progress through there. The first is making a commitment to your money. The second, putting yourself into the comfortable stage, is all about taking action and doing that on an ongoing basis. So it's great to get great ideas. And I hope today you guys get a bunch of great ideas, but ideas are meaningless without action. So the key to getting results is doing stuff. You've got to set up that investment plan. You've got to set up that savings account. You've got to do that tax plan or whatever the things are. That's just what's going to start driving the results for you. But unfortunately, there's no such thing as a set and forget money strategy these days because everything is changing so quickly. Crypto market, perfect example of that. What we're seeing in the last 6 months is like a totally different market to what it was 6 months ago. So you need to take action and then do that on an ongoing basis so that you make sure that the actions that you're taking are the right actions based on where you're at, what you want, where the world's at any point in time. The key to putting yourself in the best position possible is all about maximizing every single opportunity that's available to you. So squeezing every bit of juice out of your situation, making sure you're optimized with from a tax perspective, doing the right thing with your debt, the right platforms, the right investments, that you're not paying too much in fees. All of these things, because the power of all of those things combined together is what actually allows you to build that rapid momentum and acceleration. So I don't know if you guys, you don't have to volunteer, but if anyone can identify with those stages, as I say, that there is a commitment, there is a progression and a thing that you can do to progress through no matter where you're at. So guys, talking crypto basics, pretty simple simple and complex, I suppose, at the same time to begin with. But crypto is built on blockchain technology and essentially a decentralized ledger where you've got a bunch of different computers around the world validating data. And that's the technology that cryptocurrency is built on top of. I'm not going to get today into the super technical parts of crypto, but things that are important to know that it is private, as in non-bank or government controlled, I suppose, and anonymous. Although anonymous is an interesting word in that I have been looking at a lot of the stuff that the ATO is putting out and a lot of tax experts are putting out around, governments and monitoring bodies around the world have noted that crypto is a space that they want to focus on in the future. And given the fact that cryptocurrency does provide a perfect and basically unrefutable ledger that tracks all cryptocurrency and all Bitcoin and all of these transactions, that there is a perfect record of all transactions that are there. So it's actually not that anonymous. Then you've got the different types of digital assets that exist. So you've got cryptocurrency, tokens, NFTs, securities, and staking, just to name a few. And I know that there's more and more increasing every month, it sort of seems, but they all fall into the banner of digital assets. And I suppose they all broadly fall under the crypto banner when people talk about them, but they can be talking about a number of different things underneath them. So it's important that you know what it is that you're actually talking about or considering when it comes to your investments, because each of them have different risks. And we're going to talk a little bit more about that as well. And look, understanding and managing risk, I think, is important for any sort of investment that exists. But with something like crypto, I think it's quite important as well, because I think when you don't understand risk, that's when it's really hard to build confidence. And when you're seeing market conditions like the market we're seeing at the moment, it means that you're going to be much more likely to freak out and potentially make a bad decision if you don't know where your risk is coming from and if you don't have a risk management strategy in place. And I'm going to talk a bit about how you can do that today as well. In terms of some of the numbers, I was just looking back and I had to significantly change these numbers from the last time I did this presentation. But Bitcoin, we've seen a 6,500% increase since 2015, but it's down 66% since just November last year. So you see that there's huge potential upside, but there's also a significant downside risk, which is really important to manage. We've been seeing over the last little while serious adoption of Bitcoin in particular, but cryptocurrency adoption by big financial services companies like banks around the world, other big corporations, countries like El Salvador have actually copped it a little bit based on their adoption of Bitcoin. But we're seeing, a huge amount of adoption, which is bringing cryptocurrency more into the mainstream than ever before. One thing you should know when it comes to cryptocurrency investing is that the market is tightly held. And what I mean by that is that there's a certain number of, using Bitcoin, which is probably one that everybody knows, for example, that there's a certain number of Bitcoin that exist, or Bitcoin tokens that exist out there in the world. But there is a small number of people that own a large number of all of the Bitcoin that exists in the world. And what happens is that if you think about the overall market and you've got half of the market is tied up with a small group of people and therefore not really traded that much, that means that the entire market is only really half of the market, if that makes sense. And what happens in that case is that because there's this big chunk of crypto which isn't getting traded, it means that the fluctuations are amplified for the crypto that is getting traded, because it's not like there's really 10 million coins that are getting traded, or 20 million, or whatever the number is. Like, it's that there's only that subsection which is getting traded. So that does have an impact across the overall market. It does also have an impact with the platforms that you use. So quite differently to when you trade a share on, say you trade a Commonwealth Bank share on the Australian Stock Exchange, you can trade that share through E-Trade, NAB, Self-Wealth, Perla, like basically any platform. And all of those platforms give you access into the same marketplace. When it comes to cryptocurrency, though, you're only trading, it would be the equivalent of you only trading against other people that are on your brokerage platform. So like if you trade Bitcoin on CommSec, not that you can, but like if you're trading shares on CommSec, it would be like the same as you can only trade against other people that have a CommSec account. Excuse me. That's why it's really important when it comes to choosing your crypto platform that you look at which platform is going to be best, because with a very small platform, again, that the ups and downs of the market can be even more wild, because if there's a small number of people that are trading on your platform to begin with, they can be less inclined to buy or sell when the markets are going up or down. So I get that that's a little bit complex, but I suppose what I'm saying is that when it comes to cryptocurrency trading, that you want to make sure that you've got a good, solid, big platform to trade on, to make sure that the price that you're either paying or receiving for cryptocurrency is close to the market price that exists in the world as well. Some of the big drivers, and we see that media has a huge impact on crypto and Bitcoin prices and values over time. So any sort of news that comes out, or social media or meme stuff, obviously Elon Musk has been at this with the whole Dogecoin thing, and we see even anything that he does tends to have a big ripple through the crypto community and crypto prices. But know that it's a very unconventional market, in that much more subject to impact from media and memes and that sort of stuff than a traditional investment marketplace. But look, I think that when you think about cryptocurrency and probably Bitcoin in particular, that like when I look at Bitcoin, I think about it like it's the original cryptocurrency, so the first ever digital currency. That it's as all of the Bitcoin gets mined into the future, I feel like these bigger coins in particular are going to be like collector's items in that people want them just to have them. And, in the past, we've got people that are, saved for years to buy their first home. I see a future where people are saving for years to buy their first Bitcoin. Obviously, we don't know what the market is going to do, but I feel like that's something that will play into the future. And certainly we're seeing that play out with like the NFT space at the moment. I thought it'd be worth just talking about where I see people go wrong when it comes to cryptocurrency, as well as some of the things that you can do to be smart. And look, I get that this is partly a matter of opinion. So I think if you ask 10 different money experts what they thought about this stuff, you probably get 10 different answers. But I'll give you my take on this for what it's worth. I think where people go wrong with this is if they go 100% into cryptocurrency, where they've got their whole investment portfolio is all sitting in crypto or digital assets. To me, that's certainly like anyone that was doing that over the last little bit is going to be super stressed and probably sitting at a serious loss position at the moment. Another area that I see people go wrong is trying to time the market. And look, I think buying the dip, like if you can see that the market is down at the moment, it's one thing to say, hey, I still like cryptocurrency, I want to buy in. But when it's going up and down and people are going, oh, I'm going to trade in here and I'm going to trade out there and trade in here and trade out there, it's very difficult to do that, particularly with any market, I think, but particularly with cryptocurrency, where there are so many factors that impact the market and the pricing over time. So that time in the market, I think, can be a real risk. High volume trading is something, and what I mean by that is frequent buying and selling. Now, when it comes to investing, you only ever lose money on an investment when you sell it. That means that the less you sell, the less chance you have of losing. And I think I'm a big fan of buy and hold investing. I think it works with shares. I think it works with crypto. I think it works with property. And then that way you've got good assets. They're going to be good assets now. They're going to be good assets 10 years from now. And then you sort of like, why are you selling? It's only really if there's something changing in your strategy that means that you would want the money to reallocate to something else. But what else is that? Is that thing? So I think high volume trading is an issue. Also, not having targets is something that I think is a lot of people don't have when they invest, but people don't think about what are you actually trying to achieve when you're growing your wealth. And if the answer is just more money, you can end up in this situation where you're taking on a ton more risk than you really need. And it can be a super stressful ride, but for no real benefit. And I think for me, like, if you know where you want to get to financially and you're currently like on a path, trying to figure out a path to get there, the question shouldn't really be how do you get there as quickly as possible, but you run a 50% chance of blowing up your cash and having to go back to the starting line. But instead, how do you get there with the highest degree of certainty possible? I've got a bit of an example to share with you around that, but not knowing, and that's where people are always going, I'm going to get the cryptocurrency investment with the highest return. They don't realize that it's also coming with a huge amount of risk. And the last one that I've got there is crypto investing in isolation. So looking at cryptocurrency just in itself, as opposed to looking at it as part of your bigger picture plan, can lead to poorer decision making, essentially. And I'll give you the flip side of that when I talk about what I consider sensible crypto investing, where the keys are set a foundation first of your wealth. So wealth with some boring investments, shares, property, cash, ETFs or whatever those things are. I see all cryptocurrency investments as high risk, high potential reward. And I think the historical performance has shown that. And I think that that has a place, but it's not as the foundation of your portfolio, because then you get these massive wild swings and roundabouts. So if you're building wealth, I think it's really important that you set a strong foundation first. That's going to allow you to sleep like a baby, knowing that you've got this foundation that can then grow and keep your momentum building over time. Buy and hold investing, I think, is super effective. I've got some crypto investments in Bitcoin. I've only ever bought, I've never sold. And look, overall, sort of up, even with the downs that we've seen in the recent market movements. And I don't intend to sell. I don't know, perhaps I would never say never, but I tend to add. I would be thinking that I would add to that over time into the future, but don't intend to sell at all. And I think minimizing that sell, as I mentioned, that every sell is a chance of losing. Also, having clear goals and expectations around what you want your investments to be doing, what you want which parts of your investments to be doing. And I've got an example to share with you in a sec on that. And having your cryptocurrency investments as part of your bigger picture wealth plan, so that it's fitting in with your property investments, that it's fitting in with your share investments, that it's fitting in with your cash and super and all of those sorts of things. I think that's a sensible way to buy crypto, as opposed to just looking at that investment in isolation. So I'm going to talk about planning and how to plan around a crypto plan around including crypto as part of your portfolio. But I wanted to start by talking about, like, how much risk do you actually need when it comes to your investing? So look, I think that as I say, it's really common for people to not think about what are the expectations, or what are they actually looking to do when it comes time to invest their money. And essentially, like, I've got this example, long story short, but I've got this example talking about if you save and invest $1,000 into the share market and let that money bubble away into the future. So essentially, you save $1,000 every month. You invest it into the share market, so like an Australian share ETF or whatever. If you'd done that 10 years ago, or for the last 10 years, you would have put in a total of $120,000, but that money would have grown because you would have got some dividends on the shares. You would have got some growth on the shares would have gone up a bit in value as well, such that your $120,000 would now be worth around $190,000. If you keep that going for 20 years, you would have put in $240,000, but you see that your money would have compounded to $642,000. 30 years, you would have put in a total of $360,000, but your money would now be worth $1.7 million. 40 years, $480,000, but your portfolio would be worth $4.2 million. Now, the reason that I put this example up, and I know that this isn't cryptocurrency, but this is investing into the quote unquote boring old share market average, which is like easy to achieve. You can get it every day of the week with the basic like Australian Share Index ETF. And you see that the results here are pretty powerful. Like, you're talking about over a long period of time, a 10x return on the amount of money that you're putting in, starting from $0 to begin with. Now, if you can do that, and you can do that sleeping like a baby at night, knowing that you've got a solid quality diversified portfolio with Bitcoin or cryptocurrency investments, you'd expect that you could get more, but you run obviously more risk. So, and this is why the heading of the slide is there to say, well, how much risk do you actually need when it comes to building your wealth? So I think that that's something that's really easy to lose sight of, because our psychology, our inner investor always wants more, and it always wants the most that we can get from any investments. But if you know that you can get here, and it's like nothing's guaranteed when it comes to investments, but with a high degree of certainty, and then and I believe that cryptocurrencies are going to perform really well, but they may not. It may just there may be some blockchain 2 technology that comes along, and all of a sudden, like, the whole world changes and everything, and then it's all up in smoke. And then, maybe the value goes down significantly, or stays down and doesn't grow. You go, like, anything could happen. So how much risk do you actually need? Keep that in mind when you build out your planning. Because I think that, like, tying it into what people think success is, that most people think when it comes to your money that success is just about choosing good investments, but success is really about a whole bunch of things. It's investing, it's being smart with your tax, your saving, your property strategy, your debt strategy, having good habits, setting goals and targets, having confidence, and managing your risk. And I think without a plan, you don't have the confidence to execute and pull the trigger on stuff. You're unclear on how much you should be pushing, or how much do you need to push, or how far do you need to push to get the results that you want. You miss opportunities, and you end up falling short of your financial potential. So talking through like how you actually plan and make decisions with your investing with cryptocurrency as well, that there are some key steps to go through. And this is the process that we guide people through when we help them set up a financial plan. But it's essentially the same process that anybody needs to use if you're setting up a financial plan for yourself. And essentially, where you want to start is to focus in on what's actually important to you. So, the question that I like to ask to tease this one out is to say, hey, if we're having a chat 3 years from today, for you to be blown away with where things are at and what's going on, what's important to you? What do you want to see? What do you want to not see? Where do you want to be? That gives us a bit of a guiding light to work towards. And then you want to understand all of the different moving parts that are going to impact your plan. What money's coming in, what money's going out, where's it going, what assets have you got, what's your tax position, your capital gains position, what debt have you got, what interest rates are you paying, all of these things, because that gives you a baseline that you can then start layering decisions over the top of. Then from there, you look at the different pathways, the different things that you can do to grow your wealth. So it might be like buying shares is one of them, easy one. Buying crypto is another one. Buying property is another one. And you can look at what do they look like. Okay, if I just crank all my money into a nice diversified share portfolio, what does that mean for how quickly my assets are going to build? Now, what if I do that into a crypto portfolio? And then what does that look like? And you use some numbers and some assumptions. And then you need to, normally when you're looking through them, you go, well, okay, that's what the numbers say, but then what's not in the numbers? What are the trade-offs? What are the risks? How do I feel about those different strategies? And typically the best strategy for each one of you guys is one that gives you a good balance between the numbers and having your risk covered and having you guys have peace of mind with what you're doing. So from there, like, people are going to generally be more drawn to one path than another. And I should say, it's not just about do you do shares or crypto or property, because most of the time it's a combination. It's just what is the right combination. But once you're drawn to that path, then it's just about doing the plan piece, which is like, what are the actual practical steps that need to happen to turn these great ideas into the dollars in your bank account? I'm a big fan of trying to automate as much as you possibly can so that you've just got that track to run on, knowing that your money is going to keep doing what you want it to be doing without you having to, actually do stuff. So that gets you having a plan and the plan set up. And then 6 is like the execution or the ongoing action is where that kicks in. So making sure that you're looking at what's going on with you, what's going on in the world, what's important to you, and how does that change, and making sure that that fits with what you're doing. Just got a question from Byron. Says, how does never selling fit into your setting targets advice? I think that with any sort of investment, so whether you're talking about a crypto investment or a share investment or a property investment, you don't, like, if you want to hold it forever, you should still have targets around how that money would grow over time. So like how your wealth will actually build. With a share, like, I suppose it's probably a little bit different with a share portfolio that throws off some income and some growth. But if, like, I know for me that I need to have a certain level of wealth to be able to fund the living expenses that I want week on week, on month on month. So if I'm going to position my assets to get to that point, and it doesn't really matter that much if I sell them or if I hold them. It's that I know that I've got a wealth target to get to give me the level of wealth that I want and the level of income that I want as well. So I hope that makes sense. Also says, what are your thoughts on Bill Gates' comments that crypto is based on the greater fool theory? Not super familiar with that, Byron, if I'm being honest. But it sounds like something that Bill Gates might say, maybe you can clarify, and I'm happy to talk more about it. So, guys, following through that planning process, if you get that right, the outcome is that you put yourself in a position to take confident action. You find an ideal balance between growth and lifestyle, like getting ahead with your money and living a good lifestyle at the same time. You find a way to maximize all of the right opportunities for you, because it's not just about doing everything that you possibly can with your money, but it's about doing all of the right things that are right for you. And you end up fulfilling your financial potential. So, a few mistakes to look out for and things to avoid. The first one, and this is a big one, it's got a bit of attention in the crypto space in the last little bit, but staking crypto without understanding the risks. It was actually would have been funny if so many people hadn't lost so much money with the Terra Luna UST fiasco that we saw in the last little bit. But I put some comments up on my TikTok and got into a bit of back and forth with this user on there, and they were talking about how they were getting this 18% return on the UST, and I was like, yeah, but what about the risks of something going wrong? And there was a guy, he said, like, what risks, and didn't understand. And I put together something else to sort of talk through what the risks are, and the fact that with crypto staking, which is, and for anyone that doesn't know or isn't familiar with this term, it's where you basically, if you have cryptocurrency investments, you can give it to a company, then they exchange it for a token which is staked, and then they pay you an income return based on what you've got in the token. But oftentimes the value of the token is pegged to the value of either a crypto investment or like a dollar based investment, and the company is taking on a lot of risk. They're the ones that are promising to pay out the money to you, but if something goes wrong in their business model, then you're the one carrying the can. And this is what we saw with UST, that it was pegged to the US dollar and said that they'll exchange it 1-for-1, but because the market lost confidence in the futurability of that project, that it meant that then the value started going down. And when the value started going down, people started freaking out, wanting their money. Then the value went down further, and then everybody lost a whole bunch of money in the end. So understand the risks, and it can be quite complicated, but at least understand that there are risks, so that you're going in with your eyes wide open. And actually, a good way to think about this is to bring it back to that example that I shared, where the 25-year return on the Australian share market is around 8.7%. So if you're expecting a return that's above that from any investment, whether it's crypto, property, or anything else, then the risk of that investment is going to be higher than the risk on the share market overall. The financial markets keep themselves honest in that regard, that if you're expecting a 20% return, you know that that's a high risk investment. Generally, if the return is lower, then you'd say that the risk is lower as well. So understand that there are risks and the level of risk that you're facing. ATO reporting, I think, is a major mistake that people are making as well. That ATO has called out that they are looking at people's cryptocurrency trades and making sure that they're doing everything, like reporting everything correctly there. I think people think that because blockchain can seem anonymous, that they might not need to actually pay tax on crypto gains, but the ATO is looking out for this stuff, and I think they will end up matching data. And I think that people that aren't reporting are going to get in trouble, and potentially going to end up with big tax bills at the wrong time. Foundation's not set, and making choices in isolation. I mentioned making sure that you're clear on the actual target that you're getting as well, or like what it is that you're going for. I think that's a really powerful one too. So guys, look, those are the main considerations from my end, or mistakes that people make. I'm happy to jump into a few questions, and I am just a little bit mindful of going a little bit over time, but I just want to share with you one model with you before I get into Q&A, which talks about progression from where you are today to future state when it comes to your money. And look at basically how the model works is that in the future, you're going to be in one of four positions, ranging essentially from not so good to really good. And when people think about getting from where they are to future state with their money, they think about it like a straight line. But because of the compounding impact of time and money, it's actually a curve. So I think if you're not 100% on track to end up in the ideal position that you want to be in, that you need to do some stuff and actually jump the line. And when you do that, then you just need to be taking the next step and the next step and the next step, which is easier because you're already on that path. So the longer you leave it, the more time that goes on, the jumping the line piece can become more and more painful, and putting yourself in the best position can become impossible. So the sooner you get started, the easier it is, because the jumps and what you need to do to get there, they become much smaller. But the longer you leave it, the harder it is. So this is my motivational pep talk to say, the sooner you make it happen, the easier your life's going to be. So guys, I'm going to jump into Q&A in a sec, but for anyone, I hope you guys enjoyed that. For anyone that's keen to get around to more of our content, you can check out our upcoming events through Ben Nash and Eventbrite. I've actually just popped a bunch of stuff into the chat there, these links here. We've got a ton of events coming up over the next little bit. There's also a bunch of tools and resources on the Pivot Wealth website. And you can follow our socials, TikTok, Insta, and we've got a podcast as well on how to be successful with money. Guys, this sort of helping people with this sort of stuff is our jam. So if you're keen to learn more and chat about how we might be able to help, you can book yourself a call through there. I've actually popped that link into the chat as well. And yeah, so you can just follow through to our calendar there. And if we think we can help, we can talk about how. If not, we can point you in the right direction. Guys, I got one question here from Jessica, which says, advice on choosing exchanges, choosing advice. So 3 bits of advice on choosing exchanges. So look, I would say fees are important. That's something that has to be priced competitively. They're not the most important thing when it comes to choosing an exchange, but I think that the fees are important. I would pick one that is Australia based, just so that you know that you've got a little bit more recourse. It's not bulletproof, this, but an Australian based company just means that if something goes wrong, that you're not chasing someone around the world. And the other, you want them to have a certain amount of size to have that depth of transaction platform as well. One other thing that I'd say when it comes to choosing exchanges is you probably want to find one that has a good user experience, one that's easy for you to use and navigate. Because if something's too hard, then you're just not going to follow it through. So guys, I hope you found that helpful. That's all the questions I got for now, but team, check out our upcoming events, and I hope to see you on the next one. Bye for now.